Wake up, goddammit. Welcome to MARKETcast with Unk and Market Monk. Morning, P. How's your week?
Oh, it was good. I it was a week where I had some stuff, really early in the week that popped off pretty large, and then just kind of, you know, sort of took it easy from there. Did have stayed on V, um, some of the SaaS stuff, and then I ended up catching uh, Facebook on Friday. Didn't have it through ER, but it took off another 8% or something. So it was nuts. Managed some swings, liking some of our reads on kind of big thesis items like Tesla. So just a lot of studying, more studying than anything else for me last week.
Yeah, I opened the week real good with SoFi, and I kind of hung out in there Monday. Pretty much watching the $9 level. It's there and a little bit above is where I was scaling out at. Pretty big dub on that. Um, so I went golfing Tuesday, and when I came back Wednesday, I pretty much told myself A plus setups. Don't really like trading around the Fed until after. So Wednesday I kind of was real light, and to be honest with you, the rest of the week I stayed pretty light. A little bit of in and out of rum. That's my like go-to scalp chart right now. But a big less is more. Didn't hit weekly goal, um, but a lot of, I guess, one triple and a lot of base hits. Made for a pretty decent week. Um, the Facebook thing I do want to touch on with you a little bit. Um, you nailed that thing. I remember clearly the ER read in this session of you saying, Zuck turned it. Zuck, I would bet here that Zuck would turn it around. That's your exact words. It was just real hard for me,
Yeah.
having a 90 average, not letting go at 192, which was my level. You can't win them all, but still, looking back, that was a big win. Um, Got to learn how to let those winners run when the reads are good, though. That's for sure. It was just hard last year, first quarter, second quarter, holding things that you actually got profit in because we weren't used to that for the last 2 years.
Uh, well, yeah. I mean, yeah. You look at the kind of take yourself back. Facebook made that move to I think it was like 325, and then
Pulled back, yeah.
pulled back under 300.
You're
That's
out
tough to
there.
keep that through there, Yeah, I mean,
Yeah.
it's just it's how and when do you get back, and that actually brings up a good topic because I had a pretty big win on D Dog share side. I didn't get into options. I was doing snow instead, but it was that one caught the huge move off earnings, and then it's kind of like when do you go back, and I went through that with Roku. D Dog's actually even a little better than Roku. It's a little more reliable on some of these pullbacks it has. But I had 122 really clear in options, and when that matched up with what you were telling me, I was like, well, that's the spot, and was just able to comfortably keep that, through Friday, and now it's sitting at 134, and um, caught that Amazon sympathy move that those SaaS stocks, normally do. So yeah, I was really really happy with that. It's obviously not as easy to own as many shares when it's 134 instead of
Sure.
where it was. But still, I mean, we talk about getting a piece of the work, and I think that that's a good that's a good example of that. And if the market does kind of what we're thinking it's going to do, um, yeah, we'll rotate around to some new things that are way oversold. But you also have to, yeah, I got to figure out when to get back into some of these uptrends because there's going to be opportunities there.
Yeah, yeah. Just looking at charts, I kind of had a come to Jesus meeting. I was like, was I really just a good trader when I was working because I traded November to like, January, February? Because we've had two really good Novembers to January. And just that cycle of, beginning of the year, some rotation in the S&P, and then the hopefulness of the guidance Q1. Um, I'm just coming to the realization maybe that's the best time to trade all year. I don't know how you feel about that, but um,
Yeah.
it's been pretty. pretty good. And if you look at the charts right now, and if you watch Read the Room this weekend, that's pretty much what I'm looking for. It's just that the ones that took a little bit of a break didn't cut back in January, and still have a lot of range left. Just a standard pullback that makes people forget about them.
Yeah, absolutely. And I had I was getting into it a little bit on Twitter with some people because we're in this euphoria, and the options traders are acting like 500% is normal. You buy a contract, it goes up 500%, and it's like, this is my style, that I'm gonna get 500% trades. And I was just like, that's not a style, because for one thing, what's probably happening with the guys who post about that is they're winning 3 or 4 out of 10, and they're posting the big winner. So it gives people kind of a skewed view of that, and also that just isn't typical for the market most of the year. And we've had 13 out of 14 weeks have been green in SPX, um, and the performance of those mega, the mags, well, the mag six, outside of Tesla, has just been historically good. So yeah, you can just throw a call in there and it'll take off. But you got to get used to taking option side. I mean, 30%. I think that's kind of like where you start to move out of it, and and then some of them go to 100 or whatever. But you can't aim to make 500% a trade. I'm not going to take those guys seriously, and nobody else should either.
I kind of talked with it value a little bit this weekend, and I think it works for option side, but as well, I think it's one of the parallels that's similar with options and shares. But I don't promote it because don't I'm a beef guy. That's why I don't promote it. But
Yeah.
if you want the full move or you want a position for a runner, you gotta go a little bit bigger on share size. I'll say you go bigger in the beginning, and on options you can't buy one and try to get the 500%. You got to take your money on that. And the same with shares. Like if you only get 100 shares, like you kind of just take the percent and keep doing that. You need 2 contracts, 4 contracts. You need 3, 400, 500 shares, a couple thousand shares. So you can scale out. That way you are ahead in the trade. Just holding 1 or 2 for the life of the move is mentally it's draining, but it's damn near impossible to time. Um, that's why you have more arrows. That's what scaling in and out is. It's just extra shots. Um, and I think
You want
that's
to
like the only parallel you have on the option and share side is that you have to get the position right going in if you want the full move. It is what it is.
Yeah, and I say it all the time. Like, if you want to take on that risk of catching the big multi bagger, you got, like, for me, I got to try to make it free.
Yeah.
And with the option side, that usually means you have 4 and you're out of 3 of them. Goose and I did that exact. We didn't even discuss it, but we ended up doing the exact same trade at the exact same strike on SMCI, just because we've been doing that stock for weeks now. And it has some crazy pullbacks intraday, but we were both like, look, it's going to go to 600 this week. I'm just going to keep one, and we'll see if it happens tomorrow. And it ended up topping out at 610 or something, and Friday morning, and then you get out of it, and it pulled back and did its thing. But if you just have one and that's your whole trade, that thing went from $100 to 300 to like 85, 150, and then did the like $600 thing the next day. You can't sit unless you're really just planning on, I'm just going to keep this till tomorrow. That's not, you can't just buy one and do that. That's crazy. So they're all, I don't buy a lot of what these guys say. The guy was claiming this big win on MDB. I mean, I followed that contract exactly. I had puts at the time. His contract was in the ditch. But then the Amazon thing happened. So he's like, oh, it's a big 300% winner. It was down 80% though. Who when he alerted it? Who held that? Who held that
Yeah.
through all that? Nobody does that.
Well,
So yeah,
that's an easy answer for me. I mean, just where we come from, where our origins, it's about protecting your neck. We earn our money. We all most of these people in here
yeah,
work. Like we're workers. We 9 to 5 guys. We all started there or are still there. I mean, Goose is running a damn business every day. So
yeah,
it's about keeping your money, and I think a lot of what we do comes from that angle. Where those guys, you've nailed it the last like month talking about it. When you have the $37 left at the end of the day, you can only buy one contract. So it's all or nothing. It's just, and that is the style, or that is the
yep,
angle they're taking, is that I can take $30 and turn it into 3 or 500. And that's what's alluring to them, not repeating the
hmm,
process, not filling a cup, and not protecting their neck.
yeah,
And that's more important to me. I mean, no give
yeah,
backs, close every trade green. I don't know. I mean, it's just way more important if you want longevity in this.
yeah. It is, and I think the fact that what we emphasize too, you can't, and this is why I don't do this. I don't really like to reflect on this is what this contract ended up doing.
Yeah.
If and in fact, like I had the what was it, I forgot the anyway, yeah, AMGL, or one of those, whatever. But it was up 13%, and I got puts early, and I ended up cashing out like 400-500%. One of those IV crush deals. The guy who commented on it, he posts the total amount that contract ended up going for was like 1,300% or some shit. I didn't really care about that. I mean, because if you look at what happened with it, it did make a little bit of a recovery. A trade like that, as soon as the sellers lose momentum, I just go ahead and get out, because you're every little green candle you get is like $100, and it's like, why would I want to do that? So it's like, who cares? I don't care what it ended up doing. I cared about my trade, because it just messes with your head, and it's not realistic to constantly talk about this is the if you held the whole and exited perfectly, this is what would have happened, especially option side. So I think you enter stuff with a goal in mind into the trade. It's why I like trading to these pivots on the option side, instead of using the move to the pivot as like the entry or something like that. So yeah, keep your goals modest, and it's repeatable, and you'll do fine. I think that's a better way.
Yeah, I think a lot of these guys, like when obviously they get caught up in the, I just got to have a winner to cover these last three losers I have. So I mean, that's where the posting goes, and you have to sell the story. So I mean, that's really what it is. Um, but the problem I have with that is with like the people in our room, again, that the time is kind of limited. If you're focusing on something you exited, like how is that going to, first of all, make you any money, and how is that going to help you in trading? And what I always do is, right when I exit a trade, or I mean, even scale out, I just think about the next move. So if I'm all the way out, I'm thinking about, all right, I will re-enter here. I don't care if it goes up or down or left or right. I'm worried about my next trade on that stock. And I mean, to sit there and get your bottle of lotion out and watch it, to me, is just, I mean, it's so counterproductive, especially if you only have a couple hours a day to devote to this. You need to be focusing on what's next, and like we say, fill your cup over and over again. Get a repeatable process versus this is the one that's going to change my life. If you want that one, it's going to come from treating something like a bill. And I'm just speaking from experience on that. That's where the big one's going to come from.
And then a lot of the biggest winners do sometimes end up being um, hedges on a share position. And what Value did with Humana is something that's happened to me a few times. It happened with Enphase on one of its big earnings implosions. I had puts on it because I wanted to keep some shares. I ended up making 5 times what I my whole total share value on like 3 contracts or something. So yeah, in options, that kind of thing happens. But the pure directional lotto, especially on the crowded stuff, It's um it's rare, and don't trade that 20 times looking to get the one win just because you want that rush from it. That that's important to keep in mind too. I had one more thing on that I noticed that I wanted to cover. So I had a note on snow early in the week, and I said 198 is where I like it. And I'd been looking for snow to break down a lot more than that, but it was kind of like what happened with Roblox, where I was just, I could just tell, pretty sure. I'm like, okay, it's not going to happen. We're not going to get in the 180s here. Fine, whatever. So this is the best spot I've got, and kind of purely an options trade. If you wanted snow shares, there was a moment for that. But anyway, so Snow then has a nice trade to like 205, comes back again to my spot. Friday goes nuts, goes 10% on a lot of Amazon momentum, the cloud stuff, and all that. Don't be the person who comes in and like talks about buying it then. I mean, well, it's fine to talk about buying it then, but don't actually do it. And it's just, eh, your entry is so much more risky there. It can go higher. I think Snow's a $280 stock, probably, in my opinion. But the journey there is not going to be straight up. The premiums are juiced on a move like that because institutions are piling in. So you just gotta wait. And I just really encourage people, especially if you can use your weekends or you know early in the morning, um, get some of this stuff when we're talking about it, not when we're selling it. That I feel horrible when people do that because they're asking me about it. It's a stock I like. It's like one of my favorite ones, but man, that the entry 10%, 12% from where we talked about it, not a good place to be. So I just really want people to be careful about that because there is going to be something else in the same sector even that's in a better spot.
Yeah, I always say that when we get new people in the room, like that's the one negative of I guess not being an alert service is you need like a week or two just to kind of get on the merry-go-round with us. Some plays are towards the end, some are just being
Yeah.
thought about, and some are kind of in the middle. So yeah, once you get on the merry-go-round, I think it's a lot easier. But just in general, using that. Um, I think the Twitter sphere or the market is accustomed to that. Like if someone mentions it, I can just go buy it. Um, and that's just not that's probably not a good strategy in any market or condition or with any call. I think you should always have your own plan. It's just taking the information from sources and coming up with your own plan. But the buy-in on the exit, I totally get you. That's why I've been back to the make 10% great again. Because we get into that on share side where the 10% move, like I'll say buy below two, and people are asking me at 199. It's like, why you would have already had so much room if you would have just got in on the support level instead of on the breakout level, um, or the psychological breakout level. I mean, and I can talk probably, Cron, Tilray, 4 or 5 different stocks that are like that right now. And so you want to play the percentage to the level. You don't want to say, "Oh, I got to get on this bus before it takes off." And I see that a lot.
Yeah, I mean, and especially too, like, let's say I'll stay on the Snow example. I think 220 is probably going to be an issue, but I think it will get through it. I just think it'll take some time. So even if you buy a leap up there, um, you're probably just throwing away a couple $100 that you didn't need to, even if that ends up being a big winning trade for you, just because just nothing about a trend change or anything like that. Just the rhythm of the stock, the way the premiums will come back down, IV will drop, like all those kinds of things. Just you just got to be patient, and I know it's hard to do, but um, yeah, that's just where I'm at with that. That was just a situation I saw, so
Well,
and I'm not getting on anybody.
yeah,
I
it's
just want you to
it's
be
not a
careful.
it's not a system either. It's again kind of trying to find an alert. And again, you need to see it on the chart. I mean, that's why I like my notes, our notes dropped a little early. It's the greatest. lesson you
Yeah.
could get is to go look at the charts. I would just take the ones that we both kind of agree on in our notes early on, because there's always two or three we line up on, or two or three sectors we line up on. Maybe just take one of those sectors. Um, and then like go work trades out of there for yourself, like do the front work yourself, and then see what we say, see if it's similar, because I mean that's what you want to do, is get into a position where you can look at a chart and find a trade. That once you can do that, then once that becomes second nature to you, you go to all the other stuff: market conditions, share structure, the news, all of that kind of stuff is where your time is ends up focused on, instead of like, is 218 or 216 the price I want to buy here? Like that's eventually you just pick your spot, take your piece, and move on, instead of trying to take the entire flippin' deli instead of your sandwich. I mean, because that's what it all comes back to, P. It's just greed.
Yeah.
100%. Let's pivot a little bit here. Oh, we didn't even pick on Twitter today. We're being nice. Um, let's go some boring stuff. What you got in some energy out there? Energy land.
um, yeah. So oil took a decent dip Thursday, Friday. Still very much kind of in my zone here. We didn't get the breakout to 80 this round. So what I'm looking for out of oil is, first of all, for it not to break 70. 68 those where it'd be sort of in danger. So looking for that not to happen. But if things start off the week positive, kind of looking for the middle of that daily candle, that kind of $74 area. And I don't trade futures, but what the reason I want to see it there is because there's some stocks that Oxy's right back at my line. We're going to get back to this 56 and change. So I think there's an opportunity there to kind of reset this trade. And this is a good example of a trade that I was thinking I might hold for a month or something like that. But went ahead and got out. That 58.50 area was a problem. So I just went ahead and I'm like, I'll get out. I'll come back in. So that could be kind of the thing with oil. Not a time maybe to buy many leaps. If you do buy them, go ahead and just take your money and get out. So what I'm looking for basically is oil to be stable, and for some of these stocks to be at price points we've hit recently, even as recently as just a week ago.
Yeah.
So we're just kind of getting a flow reset out of oil right now.
What's your range on that price per barrel? I know 68 kind of looked like the floor on the chart. If you're just a TA guy, I know that doesn't really work on those, but
Yeah,
68 is kind of like it, and then 90 being the top. So like,
that's it.
where's
Yep.
the trend change? Well, where's your center line trend change then? Is it when it gets back into the 80s? Or are we 78? Or like what really pushes our plays?
It's I think it's 82
Okay.
is what I think.
Okay.
Yeah.
So it's still kind of
Just
the
because
middle
that's a
ground.
spot. Yeah, exactly. Yeah, because that was a spot that back in August it hit that, pulled back, and then took off, and then that's where it rejected that, like April 23. So and then just thinking about that and what the stocks were doing at at the time as well. So yeah, 82 is a big spot, but they didn't even let it get there this past round. They didn't even do much at 80.
I like those. I like those plays. And then natural gas seems pretty similar. For me, natural
Yeah.
gas is
So now,
hotter in the winter, and gas is hotter in the summer. So like we're kind of coming out of natural gas season, yeah.
uh, seemingly, but my thing on natural gas, just based on the positioning and option flow, is I'm already looking at 2026.
Okay.
So this is like a very much like a long term play, and I would say kind of play UNG accordingly. I know you were saying that after the split we maybe need some
Yeah,
need
some
some
time.
time
Yeah.
to kind of figure this out. I mean, clearly you're going to want an average under $20. Is it going to end up being, 18, or we get into like 16 or something like that? I think all that's on the table, and as you enter it, you just got to go into it with that in mind. And for 2026, I don't want any leaps over $25. I want to just keep it kind of closer to the money and just buy them and hold them through all of it. That's my thing there, because I do think that UNG in particular gets back into this kind of like 25 to 32 channel. We'll just see when that happens, and I kind of do want to wait a little bit on for the TA to settle before I dive way into that.
Yeah, I'm not the oil gas guy by any means, but just looking at these charts, I mean, $2 on natural gas and 768 on the oil. Those are like the bottoms locally, I guess I would say, last few years. Like you don't really stay under there for long.
Yeah,
So finding positions here, I especially if you can give yourself time. Like UNG, I mean, I could do share side on that. 20 was kind of my level, 18's the bottom. But just from this, I mean, this zone right here is a pretty good ad zone with limited downside. And you look at the chart, 27, 28 kind of stands out here. Um, it's not a
yeah,
bad spot to hang out with for me like 100 shares, right? Like I'm like 100, $150 downside, but I'm like seven or 800 bucks to the upside. It's a great ratio for me on share side.
and I think that this could run counter to that seasonality that you're talking about, just because of the
Geopolitical,
positioning of
geopolitical stuff.
yeah, geopolitical, and then just the um, I don't know how heavily shorted they are, but just in terms of the option positionings that they'll look to protect some of these leaps is sort of what I'm thinking. And then the 2026 part of it, just skipping all the 2025, to me just indicates uncertainty on their end, um, that they just want as much time as they can get, and so I'm just gonna get that message and kind of go with them. And I think shares obviously are going to let you do that. Those 2026 options are pretty safe as well. So
Yeah,
that's where
I, I'm
that's the
a
beef move there.
I'm a simple guy. Like I try to keep the thesis as simple as possible, and just the way it's set up is natural gas and oil gonna be cheaper than they have in a very, very long time. Like, I mean, is it gonna be a buck on natural gas and 55, 60 or $58 on oil? Or is like the 80 and 250 more likely? And for me, it's more of an upside move. It feels oversold right now, and I just don't see a planet where we get energy for super, super cheap, um, like on a 5 to 10 year scale, because those prices will be dumb if they continue to fail. Um, the 2025 thing though for me is kind of weird because I like to play these into the seasons. I like to buy. Before I met you, I'd like to buy oil this time of year and play it in the summer, and I never really messed with natural gas, but it kind of seemed the same setup. So that's the big variable for me is how to approach it with so much time. Um, you say
And
a little bit
and
on the
then
dollar, a little bit on the dollar.
yeah, yeah. So a lot of people posting TA on the dollar,
Idiots.
that it took it took off on Friday, and stocks took off as well, and so they're like, how could this happen? Facebook went up 20%. I mean,
That's what happened.
that's an Amazon
Yeah.
went through the roof, and Apple recovered. I mean, it's that part of it's pretty simple, but the yeah, the dollar breaking out a bit is something to watch going into like early this week. That's gonna throw a wet blanket on some stocks. But again, I if we had a classroom, I would have like a "don't chase puts," carved into wood above the door or
Door.
something.
Yeah.
And so I'm still there. And these pre-market moves down, or these early flushes, you can catch a put for those, but man, that turns around on you pretty fast. So I would just look, if futures want to take a little bit of a dive, I still think you got to look upside, and you got to find the stocks that are gonna flush to a level where you have a little bit of trust. Because even like MSTR for me, 450 was a good spot. 500 is turning into a good spot. They sort of like those big round numbers, and regardless of what crypto's doing, those dips under 500 are not lasting. So
Yeah.
um, just got to be patient and wait for it. Don't buy a call at $511. You're going to get it under 500 again, and you're just going to trade it from there. And if you don't, oh well, we'll do something else. But yeah, so I would look for some flushes, and the dollar is going to help drive that. That's kind of my take there. I'm not trying to draw a cup and handle or anything, but do pay attention to that, especially as it nears $104 on DXY.
When my younger ass started trading back in the day, like the winter guy trading, one of the first things I looked into was I'm gonna trade, the dollar versus the yen and all that crap, right? Like try to trade that. That is shit is the most. It's not for
Yeah,
me. It is not for me. So I've always kind of been visceral to the dollar. Like I don't care about it. I think it's just if you can make it work for you, go ahead. But it's not really causing too much motion in the ocean until you get to an extreme, in my opinion. So I've always kind of like chuckled at those guys, especially when they're not like I don't feel they're more experienced or, lack of a better term, smarter than me, that they're trying to talk about the dollar. Um, but when Professor starts talking about it, and the word I always look for him because I overuse it and he does not, is divergence. When he starts talking about divergence from things, you really want to pay attention because that will eventually catch back up to each other, and that's usually tradable. Whether it's the dollar, oil, SPY, or Bitcoin, it really doesn't matter. Um, but yeah, the dollar for me kind of a foreign language to me.
um, yeah. Well, and I would throw the 10 year um,
Yeah, same thing.
10-year yield on bonds. So that too. There's something to watch. I think because if you're not necessarily to enter trades, but if those start spiking, just have your exit plan, especially in options, and especially in options on something that cares about SPY. Your big mega caps and all that, because that can shake things up, and I just think Friday was an anomaly just
Yes,
because of what Facebook did.
yes.
So I wouldn't read too much into all of those going up at the same time as some hint at a crash or something. Not really like that, but do pay attention to those this week.
That was the 10 and the 5 inversion or whatever it was. They tried to get me in on that last year and a half or so. But that, like you said, I mean, you can watch that, but when that's happening, the only thing it does is drag the whole market down. It's not like you can find a sector that does better based off of that, the 10 and the 5 year yields. It's just not. For me, that's more for a big money that always needs to make money stuff. They have to hit their 2 or 3
Right,
percent on
right.
their $1 billion. That's for those guys. That's not for me. So,
Yeah,
um,
yeah.
I mean, it's good to be aware, but um,
Uh,
yeah, I don't think it's something that you wake up and it's in your first 5 checks
so
on any level.
I I actually I had a question about big money, and has to do with Meta and this move. Do you think that these funds get into a position where it's like they have to buy Meta now
Yeah,
because of the dividend?
that's exactly what happened. Yeah,
Um,
you nailed it. You nailed it. They put the dividend and people are proactive. So let me think of the year. I think it was 19. Don't quote me on that. It might have been 18. Tesla was getting added to the S&P 500, and they damn near doubled in like a month and a
yeah,
half because the people that knew they had to own it when it went into the S&P 500, or the people that could finally buy it because it is in the S&P 500, um, were doing that early. They were doing that before it qualified. And you're seeing that with Meta with the dividend. That's all that dividend was. It's really not much. Um, it's the least they could do on the dividend. It's not like a big dividend if you look at it, and it is just so they meet a requirement for ETFs and funds and stuff like that. Smart move though. Smart move. I think it
Oh, yeah,
continues because
definitely.
of, I think it continues because of that too. Um, but it's not something that I would hop in right here at on share side.
Yeah, yeah. Yeah, I have something on that next session because I kind of tossed meta in
Oh, decent.
to a category. Because, yeah, but
Oh yeah,
yeah.
you
So that
did. Yeah, you
with the
did. Yeah,
S and
yeah.
P thing, that just happened with Lulu. Just did that,
Yes.
so that was part of their big move up, and it's kind of
Well,
pulled back since
that
then.
should be
But
like on your calendar, like mid-November, or November 1st, mid-October to watch for S&P rotators. It should just be something you look for. I mean, I do. You just look
yeah,
for the bigger names that are going to get picked up. And then if you like the other side, which, the put signs on the door for a reason, but the ones that are getting taken out probably are going to go the other way. That's just kind of how that works. Um, the S&P is probably the biggest fund in that regard. There's a ton of other funds that do have rotation in and out, but that's probably the easiest one to follow.
So one that I followed that did have some relevance when they rebalanced QQQ and
Yeah,
Adobe and AVGO got a bigger piece of the pie. That impacted a lot of how option flow works on them and how some of the price action has gone and really the way AVGO took off. Um, you know that was sort of part of the puzzle too because that rebalancing had happened like 2 or 3 weeks before that. So it can give you kind of a little bit more confidence in your thesis when you know that they're going to have to buy more, um, given what's going on with the funds. So
AV,
yeah, definitely a
AV,
good thing to watch.
AVGO wasn't on my list for no reason. I'll just go out and say that.
Yeah, yeah, right, right.
um, let's hop into the SPY before we get to work here.
Yep.
482.86 on the bottom, 496.05 on the top. So 482 bottom, you had 480. 482.81 Unk. I missed that by 5 cents. And then top is 494.94, and you had 491.13. We have 496. So I'm closer, but still $2 off. As I said last week, this market's strong, P. Ain't nothing getting in front of this bull right now, it looks
um,
like.
yeah, no, and I kind of expect that to continue. I don't. I mean, I don't. I even like I said on Friday, I was like, yes, some of the stuff looks overbought, but what are you gonna buy a put on it?
Yeah, what are you going to do?
Why? I mean, what's the reason? It's just because it's been going up. Like that's not a good enough reason to buy a put. If something hits all time high, the most likely outcome is that it's going to do it again, until it doesn't, and then you look for some kind of trend change. But yeah, I think we continue. 500 obviously is
Yeah.
on our radar at this point. Um, but yeah, I'm gonna make you go first because
Well, yeah, definitely
you're
100%.
closer.
I want to take a moment. I want to take a moment here, just a moment, because we don't do this. And we should have been doing this every day since, I'll give you the date. Hold on. Since November 1st, every day we should have been posting this fucking 411 number. I don't take credit for it. Me and P worked this out together.
Yeah.
That was your bottom though. 411 was your fucking bottom. We ain't brag about it. We just moved on and tried to trade since then. But no one else had 411. Those fuckers were all 370. Sorry, I've been waiting to say that for like 2 months. um, but yeah, I mean, finding real levels is what we do here. Making sure it lines up is what we do here. We're not always right, but we're fucking pretty consistent. All right, I'm done, P. 484 seems huge. I like 485. I
Yep.
don't see the pullback, so I'm going to go with my 20 day, just because I preach the 20 day. 487, 13. I'll just steal it. 87, 13 from my downside. And then the top side, um, lots of ERs this week. I think in general, if the market is going to continue up, the Mag 7, it's a Super 6. If you're taking Tesla, I'll call it the Super 6. If those don't continue, the only way the market can go up is if the smaller, the B pluses and the Bs kind of pick themselves up. Snow 280, shout out to that. That's got to happen this year if this market's going to continue. Stuff like that. Um, so this week's ER is huge. I am going to go into the 500s. I'm going to say 503.69. Shout out Goose. And that's what I got. So 503 and 587. Pretty big window still, but these candles have shown that.
Yeah, no, I like that. So I'm gonna go on the bottom for me, 489.48. Just kind of looking at the middle of that daily candle there, and it also, I think that they might want out of some 490 puts for this week, so they might just let themselves out there. And then my upside, a little bit of a tighter range. I'm going 501.39.
Oh wow. Yeah, that is tighter.
Yeah.
Do you think? Let's ask that then. Do you think we are 500 at the end of the week?
No.
Ooh.
I think we pull back a bit to close the week.
Okay,
Still.
I'm a yes.
So just under.
I'm a yes.
Nice. Okay. Yeah, I
Um,
like it when I don't agree.
just so we don't. Well, I was kind of about that way. I was looking for some confirmation from you, but since you don't agree, I'll just go with the other side. Yeah, I think we do. Again, this market's strong, and we have enough gunpowder, i.e., ER reports from things that are oversold or haven't made these kind of moves yet, um, to really have a push this week. So that's what I'm seeing. Did did you look at the ERs this week? It's loaded, P.
Oh yeah, it's a lot of my favorites. Yeah, yeah. So yeah, definitely. Although you got CMG, they've been stagnating for a while now. So I don't
That fucking guy. Ah, just try.
know.
You can't even help people nowadays, man. Can't even help people nowadays. They take it the wrong
um,
way.
yeah, and then yeah, I don't know. And then when they double down wrong,
Yeah.
I just it gets to me. It's like, well, oh, I get your point there, but what I'm saying is it's been stagnant, and I'm like the whole history of that. Call up the weekly the monthly. Never, it's never been stagnant
No,
at all. So
just one direction.
even like the pullbacks are had a couple aggressive pullbacks that got bought right back up within weeks. So anyway,
Yeah, I don't know what that Dragon Ball Z or Pokemon card is,
yeah,
but it's that one that's no one has, that Charizard or whatever the fuck it is. That's what it is.
yeah, yeah, yeah,
It's
yeah.
a card a lot of people don't
And
have.
it's one of those it's it's one of those, I don't know, like on your side, but like I know what it's gonna do.
Yeah, yeah.
But I mean, am I gonna buy one share?
No, nah.
Because if I wanted, if you want an option on it, I mean, here's your 4 grand. You know, like
No, buy two
you can turn
shares.
4 grand into 4,400. So
Yeah, no,
yeah,
buy two shares if you're gonna put 4 grand into that one.
exactly. Yeah,
Perfect, perfect. Are you ready to get to work, P?
yeah, yeah.
All
I'll
right,
grab a coffee and do
let's
it.
do it. Oh yeah, like, subscribe for more. Follow the link. All that
Oh
stuff.
yeah, yeah.